Well, it was just a guess at the detail level, but I turned out to be right, but it didn't last long. My overall big picture guess kicked in very quickly again. This is the update for Wednesday. The inflation report came in this morning. It came in slightly lower than expected. I won't get into the details here of why I suspected that would happen. It was just a guess. Doesn't always happen. But I suspected it would happen this time for multiple different reasons. And the market celebrated like crazy for a couple of hours. Blasted up again, several hundred points. They had noted yesterday at the close they were right at or near significant to major support levels in various major stock indexes. They used this as an attempt to try to get well above those again. It didn't even make it into the afternoon. Okay? By the end of the day, the market was showing itself to be very weak again, and it peaked out a couple of hours into the morning and kept going down from there. The rest of the day, they got down to the support levels, hung on to them for a while, but in the afternoon, they lost them and down the market went. It tried to recover it one more time in the afternoon, barely got there, came right back down again. Closed basically at bottom tick, slight uptick at the end of the day. Sometimes lately that doesn't even happen. Sometimes quite literally it is on the way down when the close hits for the day. I have seen it literally close at bottom tick more often than not lately. Didn't quite happen this time. They ticked it up one more time at the end of the day, but for all practical purposes it closed at bottom tick. Okay, the S&P 500 is now well below 4,000 and the Dow is now well below 32,000. They spent the tail end of the day hanging on for dear life to 31,800 and barely made it. Okay, it did tick up a little bit at the end of the day, which is why the close was a little better. As I've noted before, the traders worked very hard to try to make the end of day numbers look as good as possible, and within the context of a major downtrend like what they have right now, ticking it up a little bit is about the best they can do. Okay, but it still ended up basically just above 31,800, well below Dow 32,000. So the bottom line is the downtrend is still firmly established. It is getting more and more firmly established. Not a surprise to me. I pretty much expected that under the circumstance. And the main point is, in all likelihood, this is only the beginning. Okay? In part because of the following, but only in part because of the following, not entirely so. Okay? I think I mentioned before already here recently that especially in the Dow, for several months there was a major support level that was formed. Okay? Every time the market got down there, the traders bounced it right back up again. That lasted for quite a number of months until the Ukraine invasion. That's when the market blasted down below that level. Okay? But as soon as the traders figured that there was no immediate impact on the United States, noting that the impacts are now starting to happen later, and that's part of the reason why things are going down again, but traders don't think in those terms. They're very optimistic people that are always looking for the most optimistic scenario possible, even if it isn't realistic, which in this case it was not. Okay, and I knew that from the beginning. They will look for any excuse to drive the market back up again. So traditionally, the pattern they formed was one that more often than not, as I noted, blasts through, comes back up, kisses the support line more or less from the underside, and then takes off to the downside again. In the less frequent case, the very weak cases, okay, it goes down through the support line and just keeps going. That doesn't happen very often, okay? And in the most rare case, which is the kind of thing we just saw, okay, helped along by a law against recessions mentality that has only been around for a few decades, okay, this is a very old pattern that I'm talking about here. It's been known for a long time. Okay, the bottom line is that in the rarest of cases, it'll come back up punch through the support line and go back above it. Okay, that, and then stay there for a while. Okay, that is what happened in this case. Once it goes back above that support level, there's no telling exactly how long it'll stay up there. It'll come back down eventually, okay, but there's no telling how long it'll stay up there. But the point is, they held it up there for a while, in fact got a fair amount above it, but recently they punched back down through it to the downside, okay, and in the meantime, as of today's close, it is not only well below that support line again, to the point where it's going to be pretty hard to get back up there again, it is now even well below the low it formed after it punched through the first time a little while ago, a few weeks ago. Remember what I just said? When the Ukraine thing came, it punched through to the downside, went down a ways, obviously stopped, came back up again to kiss the support line, and then punched through the support line again. So they formed a bottom down there, a spike bottom no less. It didn't stay down there long. Okay? The market is now, as of today, and really as of yesterday already, but especially, certainly as of today, in no uncertain terms is what I'm saying, down below that low. In other words, the downtrend is now firmly established. The only question is how long it'll take to go even substantially lower. Again, I don't expect a big downblast to happen really soon, okay, in part because from the point of view of the Fed, that's part of the reason the market held up so long in the meantime since 2008, 2009 until the big illness came along, okay, is that after 9/11, the market became very determined to, the Fed, pardon me, became very determined to keep the market up. In other words, once it came back up after that, the Fed basically said the market can't be allowed to go back down again. Okay. And in their opinion, what happened in 2008, the circumstances that were the consequence of that and that were associated with it were a confirmation of that. So ever since then, they have the attitude of the market simply cannot be allowed to go back down a lot again. Now, my claim is eventually circumstances will overwhelm them, and it'll do so in no uncertain terms. Okay. The other side of the coin is that ever since then, if the market goes down a ways, they're going to be absolutely determined to at least stabilize it there and hopefully, preferably, punch it back up again. Okay. So if it goes down too far, okay, and nobody knows exactly how far that is, the Fed is going to probably try to step in and start making things happen again. The problem is that the circumstances, the overall extremes are building up so much that in the not too distant future, the Fed isn't going to be able to do that anymore. Okay? Can't tell you exactly when, no one knows for sure. Okay? I'll know it when I get there, just like everybody else is looking at the time. Okay? The point simply being that it can go down a bit more, I think, before the Fed would get really concerned. So expect more downtrend, and expect the Fed to act, to work, to stabilize it for a while, okay? But the overall circumstances are building up in such a way that eventually it becomes increasingly unlikely and even highly unlikely that they will be successful in doing so, okay? I am thoroughly anticipating that time, because circumstances have been getting more and 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 more extreme as time has gone on, okay? Inevitably so under the overall circumstances, and eventually it's going to build up to the point where the Fed can't deal with it anymore, can't work with the situation anymore, okay? Simply my forewarning about what is to come in the big picture, and what happened today certainly is an indication, is a step in that direction, and an indication that things are further headed in that direction for the time being, and I don't think it's overall going to let up anytime soon. Okay, so just take today's update, today's video, as a confirmation that yes, there was yet another bounce. Not only did it not last an entire day, it didn't even last an entire half day. Okay, an indication of how weak the market is. Okay, the end of day numbers were down quite a bit again, and that is not only not a mirage, okay? It is very real, okay? So just bear that in mind for what to expect for the future. The things I see on the internet, on the financial pages, is basically, as a quick summary here, is, oh my God, recession possible, how much lower can it go, etc. Okay, well, we may avoid it in the very near term, okay, but the reality is that's not how the real world works. The real world has downturns, and it looks to me like we're about to experience one again. And I can sure tell from a mental and emotional point of view, most Americans are not going to appreciate it very much. After all, that's why the law against recessions was passed in the first place, okay? But unfortunately, circumstances don't really care about that, okay? It doesn't really matter because circumstances will simply develop the way they're going to develop, okay? And the more productive and constructive approach to the situation, in my opinion, is to try to take a proactive attitude toward it, and a positive attitude toward it of what can one do with the situation and what can one do to get around it. Not so much, oh my God, now what? Or just, hoping for the best, okay? In the kind of environment I see coming, which is based on the progression of events at the detail level that has happened for decades already, that I mentioned in previous videos, okay? Hoping for the best is not going to work in the coming environment. You've got to be more actively positive and more proactive than that. That's the direction I plan to aim in and hope to aim in. Anyway, we'll see how things develop from here. How quickly it goes especially, but also in particular how the details develop along the way. So, we'll see what happens tomorrow and the next day, and depending on what happens, I'll do a video then too to follow up on it. Probably a video by early next week at the latest, but we will see. The market will dictate what I have to say and when. Again, mainly, I'm not going by projections, although I do projections based on what I've seen, but I'm mainly going by, putting in context and interpreting what I've already seen happen. And that's what I'm doing with today's trading too. I'll tell you what happened there, and the fact that I'm not the least bit surprised about it, and the fact that it does fit into the big picture, okay? Therefore it shouldn't be a surprise, although probably is to most people. And the issue is what to do about it, okay? And not in the sense of make it go away, because that isn't going to happen, okay? The sense of what to do about it in terms of how to react to that in a positive way, in an effective way, a workable way, rather than just, hoping it'll go away, or, just, now what, type of attitude. Okay? Anyway, we'll see what happens for the rest of the week and go from there. Okay?